Kangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the Close of Business. I'm Sue Lannon. Let's have a quick look at the markets. The market had its worst day in about 2 months as hopes of a rate cut were dashed. So the CBO 200 down 1%, and we also saw the ASX 200 is down about 1%. It actually fell below that key 9,000 point mark. So the themes today: Wednesday weakness, Australian shares did dip, banks extended their losses and real estate stocks reversed course. As I mentioned, the ASX 200 fell below the key 9,000 point level, and very much that rate cut weighing on the higher inflation rate, and probably no rate cut weighing on the market. So is it too hot to cut? Now, inflation came in higher than expected over the September quarter. Higher electricity costs pushing up inflation. So we saw core inflation, closely watched by the Reserve Bank, rose by 1% over the quarter and 3% over the year. We did see the Australian dollar rise on the news. It's trading around 66 US cents. So that also indicates that investors think a rate cut is probably off the table. And of course, Fed in focus. The Federal Reserve meets tonight. It's expected to cut the federal funds rate by 1/4 of a percentage point. But policymakers also have been a bit in the dark because of the suspension of key economic data during the government shutdown. Also, there's pressure from the Trump administration to cut rates. Let's have a look at the sectors of the day now. Healthcare took another fall. That's because CSL was down again, the biggest stock in the sector. Cochlear was also down, as was Ramsay Health and Sonic Healthcare. Looking at the banks, they also took a bit of a hit. ANZ lost 0.7%. Commonwealth Bank lost more than 2%. Westpac was down 3%, and Macquarie Group lost more than 1%. And let's have a look at the miners today. One of the sectors limiting the losses on the market, BHP lost 1.4%. Rio Tinto was up. Fortescue also rising. South 32 up 2%. Mineral Resources up slightly. And looking at energy stocks, we did see oil fall again. Santos was up slightly. Woodside Energy down. Karoon Energy rose 1%. Ampol fell. Beach Energy was flat. Right, let's have a look now at the top corporate stories. Boss Energy, the uranium miner, saw a strong September quarter. Lynas plans to build a new heavy rare earths facility in Malaysia to meet strong market demand. That's for oxides outside of China. And Woolworths says total group sales for the quarter rose 2.7% to $18.5 billion, and Medibank plans to significantly increase the Medibank Health segment earnings to at least $200 million by the 2030 financial year. Ansell hit a more than 8-month high on raising its 2026 EPS outlook, and Nick Scali posted a nearly 12% increase in total written sales orders across Australia and New Zealand. That's over the first quarter of 2026. And we saw Domino's Pizza extend gains, analysts pointing to growth catalysts. Now let's have a look at what happened on the markets in more depth. Joining me now, Mark Gardner from MPC Markets.
Good afternoon.
Good afternoon. So were you surprised by that hotter than expected CPI?
I think everyone was overall. Even the trim mean was a fair bit higher than expected as well. So we've had obviously a fair bit of movement in that in the monthly numbers, but we're obviously waiting for this quarterly. But yeah, I think in a way the RBA were probably fairly reluctant with the unemployment numbers where they are, etc. And inflation. It's probably a sigh of relief that they get to see more data and see how things unfold. And obviously, everyone blames the RBA, but look, the government's got to just stop hiring loads of people all the time. They're the highest percentage of employment they've ever been, or related employment via consultants, etc. And they keep giving, the 5% deposits for new mortgages and things like that. We just saw housing prices immediately go straight up, and then handing out visas if you're buying properties and things like that. So, I mean, we've had this long period where the RBA has to be the bad guy, and then the government just gets to be fiscally irresponsible and cause more problems for it. And And I'd really hark back to, there was a couple of press conferences with the RBA where the journalists were really harsh on Michelle Bullock, basically saying, well, you've broken the hearts of Australian people, but if we keep buying and we keep pushing inflation up, well, unfortunately, we're not going to get rate cuts. And that's the job of the central bank, is to be independent and be the adult in the room, unfortunately. But long term, fortunately.
Yeah, sorry, keep going.
Yeah, I know, electricity as well, but I mean, there's been 2 or 3, the government have subsidised that as well. So it really is, they were really hiding that inflation, electricity inflation, for the case of the election. So we need to get back to more fiscal and monetary policy walking in the same direction, and stop the blame game, I think, overall.
So with a rate cut, so probably off for this year, a number of economists saying maybe next year. What do you think?
It would be rare to be one and done, particularly at 25. But yeah, that's a very hot inflation number. I mean, we probably need to see another quarter's number. So I think probably for the rest of the year, yes, we're probably off. I think there's a few still sticking to a couple of cuts next year. But again, if the government keeps making policies that keep causing electricity inflation, that keep causing housing inflation and rental inflation, well, unfortunately, we're not going to get more cuts. So yeah, really, I think that we need to address the core issue of the government not pointing fingers at the RBA and vice versa, and just get on the same page, because inflation is bad. It erodes wealth, and you're seeing higher numbers in the States as well. The market over there rejoiced 3% when the target realistically that they've had to abandon is 2%. And I think we'll probably get 25 tonight, but there's a lot of politicking going on in the US with the Fed, because there are many of those Fed governors lobbying for Jerome Powell's job in May, and they're saying what the guy that's going to hire them wants to hear as it stands at the moment. But yeah, pre-2010, if we had 3% inflation and 4.3% unemployment, we would be talking about a basis point rate hike. So I don't know where the disconnect happened over the last 15 years, but we've got to be realistic. We can't have boom times all the time, because that eventually runs into a heavy bust at some stage. So it would be nice, as I say, it'd be nice if the central banks were the adult in the room, because otherwise we're just going to see these wild swings and volatility continue for years.
Well, that definitely put a dampener on the market. So ASX 200 numbers just settling down now, but down about 1% to 8,926, and health stocks very much weighing again.
Yeah, I think CSL was very much, everyone's been disappointed. There was a little glimmer of hope. We got back to about 225, I believe. Everyone was fairly negative on that on that demerger, and obviously now it's been delayed, and there was a revenue downgrade as well. But I mean, we're trading at a PE of under 20 now for CSL, which is probably, I would say, that'd be near a decade low PE outside of the COVID period. So I think there's long-term value there, but these sort of market darling stocks, WiseTech's another. It happened with ResMed when the Ozempic scare happened a couple of years ago. Because they're a position you don't normally have to worry about in your portfolio, when something bad does happen, there tends to be quite an extreme panic. But look, I think once it settles down, overall, that CSL in hindsight in a couple of years will probably be very good buying here, but it's not much fun at the moment, I've got to say, because it's a very large chunk of a lot of people's portfolios. Sure,
very big stock. And WiseTech, you mentioned there, disappointing for investors, that raid.
Well, yeah, I think disappointing in the short term, but I think the executive chair and the board is now essentially controlled by the founding CEO or founding chair. His statements are saying he is WiseTech and things like that. I mean, we're talking about a $25 to $30 billion company, or anywhere up to $35 billion, I think, at its highs. I think a founder getting in the way and preventing a succession plan due to their ego, etc., has been very detrimental to a lot of companies. But there's great software companies around the world like Palantir, Asana, Figma, where the founding CEO had to swallow their pride. They got moved on, and the company's then gone on to do great things. We wouldn't consider buying it until he's gone, and because I think, as I say, not only is he dominating, but he's also preventing a succession plan being put in place, and that's our biggest sticking point. Is not the key man risk. It's more that he's not even putting a succession plan in place, and it's like I said, it's a $25 billion company. Even after that drop, no $25 billion company is just about one man. So I think the company fundamentals are very much intact, but you've got to see management, with, not playing games like this. It's, if you take other people's money, you've got to be responsible for it.
Mm-hmm. Well, let's turn to the US, and we've got some big tech names reporting this week. What are we expecting from Microsoft, Google and Meta?
Microsoft, Google and Meta tonight, so that'll be after the bell, probably about 7:30 tomorrow morning. So everyone's really looking at how much they're monetising AI, because there's been a lot of this rapid expansion, a lot of buzz around these chip deals and deals with OpenAI, etc. But at the end of the day, that infrastructure spending the brakes can be pulled pretty quickly if they're not monetising, at the end point. And so I think investors will be very focused on the growth in subscriber numbers, the growth in revenue from from those AI initiatives, and whether the market's got a little bit too far ahead of itself. Probably won't necessarily affect the chip makers and things. I think that infrastructure spend still needs to be made, but we are very frothy at the moment. I think it's the best 6-month bounce from a technical bear market. We were down 20% in April. It's the best 6-month bounce in history by a very large margin, significantly larger than COVID even. I think even with AI being an industrial revolution style event across an economy, I do believe that we are priced beyond perfection at this point in time, and we've still got a government shutdown. We've still got private credit blow-ups. We're not getting economic numbers at the moment. There's a tariff war still in place, albeit there is small optimism. But even if a trade deal is done, we're only back to where we were on March the 30th. So realistically, a 42% bounce in the S&P is unheard. Well, it's never happened before. So I'd be very concerned at those levels in terms of buying here. I think you're probably reviewing portfolio and potentially, because you've had a great run if you've held on, potentially going back to cash for a period and just wait to see how things play out is a pretty prudent idea. Okay,
Mark Gardner from MPC Markets. Thank you so much for your analysis. Let's look at the stock of the day now. Boss Energy was the stock of the day with our experts, Henry Jennings from Marcus Today and Andrew Wyland.
Boss has been an interesting ride, I have to say, for a lot of shareholders. The honeymoon was well and truly over in July when it came out with a revised forecast for production, which slammed the market, and it caused a massive fall in the stock price. It had been cruising on the uranium theme at around $4. It crashed down to $1.85, and it has been milling about ever since, depending on whether we're optimistic or pessimistic about the uranium space.
I think it's a hold, but if you have got that tolerance for that volatility, I mean, it's down 45% for the year, up 30% per annum for 5 years. So that speaks to that volatility. So if you're into volatility, all the moons are aligning relating to rising short interest and so forth. But if that uranium price continues to kick up, then there's going to be a lot more volatility, and that could play to your hand. But for me, it's a hold.
And now let's have a look at the market leaders. Boss Energy rose 21%. Nick Scali up nearly 13% on its latest quarterly report. Paladin Energy also gained, as did the other uranium miner Deep Yellow, and Sims Metal rose 8%. Let's have a look at the laggards now. Drone Shield lost 12% today. The shipbuilder Austal down 6.8%. As you heard, CSL took another hit. Steadfast fell, as did Pro Medica. So let's have a look at the small caps now. Resolution Minerals jumped 26%. Terra Metals also gained 23%. Alligator Energy rose 17%. Peninsula Energy put on 15%, and Comet Ridge rose 13%. Looking at the fallers, Lion Rock Minerals lost 17%, Elementos lost 10%, Anterius Technologies lost 10%, and Cash Converters fell 7%. Let's have a look at what's happening overnight. Of course, the Fed rate decision, rate cut is expected. The US goods trade balance will be out, a $90 billion deficit's expected, and the Bank of Canada is set to make its interest rate decision. A 25 basis point cut is expected. And looking at what's ahead tomorrow, the international trade price indexes are out. We've got AGMs from James Hardie, Wesfarmers, JB Hi-Fi, Whitehaven Coal, Arafura Rare Earths, and September quarter reports from Coles, Mineral Resources, Coronado Resources, Lynas Rare Earths, and IDP Education. And a quick recap of the market close. The COB 200 fell 1%, and we saw the ASX 200 fall 1%, with 7 out of 11 sectors down, led by health stocks. Thanks for watching. Have a good night.